Good morning, good afternoon, good evening, traders, wherever you are in the world. I hope you're doing well. I hope you're safe. I hope you're healthy. I hope you've got a big smile on your face, and I hope you're catching pips as usual. Pips of Persia here. I know I promised a video on Wednesday and now it's Saturday that I'm uploading this video, but believe me, it was worth waiting an extra few days because today not only we are going to be looking at a market behavior case study for the past 2 months, but a lot of the questions you've always had in terms of how to read the correct directional bias is going to be answered in this video today. So I really do believe many of the points that was unclear for you previously will be resolved today. As usual, if you get value from the video, do press the like button down below. Let me know your thoughts in the comments section, and if you're new to the channel, press the subscribe button. Welcome to our family, welcome to our community. But let's go ahead and jump straight into it. There's going to be 3 major points that we are going to be going through today, from supply and demand, or a simple way to identify supply and demand on the charts, and using that alongside trendline liquidity or trendline manipulations, alongside accumulation and distribution, to be able to identify a phenomenal trading scenario. Now, as I said, this is going to be a market behavior case study, so we're not going to break down any specific trading scenarios. This video is specifically designed to help you be able to see the trading scenarios independently for yourself. So let's look at the very first picture. This was near enough 2 months ago, September 24th, 2020. Today is Saturday, 21st of November. So just under 2 months ago on GBPUSD on the 15-minute time frame, we looked at this accumulation picture and the minor breaks of structure that were taking place straight after the final spring. Now, before I move on any further, there's a bit of a prerequisite to this video. If you do not know anything about accumulations and distributions, then it's probably not going to make a lot of sense, this video. It would make sense to watch a few of the other videos before watching this one. But let's continue. Let's have a look at this picture on the actual chart on the 15-minute time frame. I'll just put it in replay mode for now. So this is that same accumulation around the 24th of September. And instead of going into too much detail about every single point within this accumulation, again, as I always say, the general picture is a lot more important. It doesn't matter where you put your preliminary supports and sellers climax and automatic rallies and springs and signs of strength and all of these things. None of this matters so long as you can look at the structure the correct way. The bottom line is, we always say accumulation is a manipulation of the lows and a break of structure to the upside. And that's exactly what is happening. It's always taking the previous zones of support and manipulating the previous zones of support. And once it's manipulating the previous zones of support or reaching below, as it manipulates those lows, it breaks the relevant structure points to the upside. This is more of a minor structure point in my opinion. The major structure points would be all of the highs, around the highs of this accumulation range, but this is still considered as a break of structure to the upside. Now, obviously, at this point, it's not confirmed yet that we are within an accumulation. We still need to see that the market is holding above that final low. But here's when we are going to be speaking about that first point, supply and demand. A very easy way to look at it is this move to the upside must have been exactly where the bigger institutions started to buy into this currency pair. When you look at the entire picture, all that's happening is this market is approaching certain zones of demand, manipulating the lows as it's approaching some higher time frame zones of demand. And as that happens, as it's manipulating the lows, it creates a substantial move to the upside. So you can assume that this area of the spring is an area of demand. At the end of the day, it resulted into a strong break of structure after multiple manipulations of the low. Hence why after you see multiple rejections from that same level of demand, you shouldn't be surprised. It's as if the market is recharging before going higher. Now, every single blue rectangle that you see in this video is an accumulation, and we've got another smaller distribution later on, but I'm not going to be speaking about every single one of them. I've simply identified them here so you can later on go and study this for yourself. Go and study these smaller scale accumulations that take place in the bigger picture, how these smaller accumulations can always confirm the trades that we want to take. But now I want to speak about the next point, which was trendline liquidity and trendline manipulation. This is the first example of a trend line manipulation that we're going to be speaking about. So it's very simple. The red line is your trend line. We've had first rejection of the trend line, second rejection of the trend line. So at this third touch, most likely a lot of people would have wanted to buy into this trend line, especially because it also lines up with a previous zone of support. So again, a lot of stop losses were most likely below. a lot of people probably had their risk just below this trend line. So as we spoke about previously, the market is simply reaching into that pool of liquidity, and not only that, in the process manipulating the previous lows, but remaining within the same area of demand. So that's point number one, the trend line manipulation. Now let's move on to accumulation and distribution. Before we look at this example, I want to kind of draw what I want to talk about. We're going to look at a scenario where we have a trend line. The market has rejected the trend line multiple times. And for example, as it's approaching the trend line for the third time, it starts to accumulate. And within this accumulation, it manipulates the trend line before reversing and actually going higher. Another example that we'll look at will be a bearish trend line where, again, same thing. The market has rejected the trend line multiple times. But this time, as it's approaching the trend line, it starts to give you some signs of accumulation. And as the accumulation completes, it will reach above the trend line and continue to go higher. So it accumulates before manipulating the trend line. These are going to be two scenarios that we're going to be speaking about today, but there's obviously, another bearish trend line and it distributes and comes lower, exactly the polar opposite of the first scenario that we looked at. If I want to reverse this, invert scale. For example, these two scenarios exist as well, but majorly we're going to be looking at the two that we spoke about. And this is this first example. So again, you have to see how everything is lining up with each other. We are still looking at a larger accumulation, but we are now simply zooming in and seeing what's happening on the smaller picture. And you can see on the smaller picture, as the market, again, reached below the trend line, below the previous zones of support, but remained in the same area of demand, it accumulated. This is yet another accumulation for you to go and study in your own time. Now, we always say an accumulation or distribution is valid if it breaks structure. This is now your break of structure to the upside. This is another break of structure to the upside. These would be some phenomenal areas to look to buy into this currency pair, because we now have a larger picture that's agreeing with the exact trade that we want to take. A lot of the times I have seen traders get very confused or intimidated because they have a certain directional bias, but as the market develops, they get really confused because they think that the market is going to reverse on them. Sometimes it's just about trusting your analysis, trusting the bigger picture, having some patience, waiting for more confirmations to develop, but then the trade that you will take is a lot higher probability and oftentimes a lot higher risk to reward. So again, higher time frame accumulation, smaller time frame accumulation as it reached this zone of demand and tapped into this pool of liquidity and broke structure to the upside. So it's no surprise to see this rally after. Now let's have a quick look at the result of this accumulation that we had marked up just under 2 months ago as to where the market is right now. That's the accumulation down there, 24th of September. So we've actually had the near enough 600 pip move away from that level, which is phenomenal. But the main aim is to be able to see how the market would have given you confirmations and to read the exact behavior that gets printed on the charts for you to be confident in your analysis. So let's move on. That was the original accumulation and smaller accumulations that we were talking about, hence resulting in this rally higher. This is exactly where a lot of people get thrown off, because a lot of people would be marking this up as a potential distribution. Doesn't look bad as a distribution. Buyer's climax to your sign of weakness, you can consider that your up thrust and the up thrust after distribution, or maybe this is your up thrust and that's your up thrust after distribution. Whichever way you want to look at it, fine, mark it up. But we always say a break of structure has to occur before you look at taking any trades. In this case, there was no break of structure. So even if you were looking at this, even if you were marking this up, you should not have actually taken any trades. So let's continue to look at it from the exact same 3 points that we spoke about in the previous scenario. Again, now it's a little bit easier to see that this is our trend line. Those are the first 2 touches of the trend line. Most likely a lot of people would have been waiting for that third touch to look to buy this to the upside. Funny thing is, this move probably would have created a lot of fear of missing out. A lot of people would have probably bought straight into this market as they saw the move away from it, especially if they're not disciplined. But now let's look at it from the perspective of accumulation alongside of this trend line. Exactly the same as the previous scenario, you can see the accumulation as it's reaching below to most likely the levels that people have their stop losses at, looking to buy into this trend line. Again, in your own time, you can put it in replay mode, go to the lower time frames and mark up that accumulation for yourself on the 5-minute time frame. However, again, the picture is the same. It's the constant manipulation of the lows and we're breaking structure to the upside. So on the hourly time frame now, it shouldn't really be surprising to see the rally that took place from that low. Identical to what we spoke about previously. So what does that make this zone now? Obviously a zone of demand. How at that level we have reaching below previous lows in the market, accumulating at a zone of demand, and it's creating a new structure point. So you could identify that level as your zone of demand to not be shocked and surprised if you see the market reach it multiple times before having the next rally higher. And this is exactly where you can manage your trade correctly, even if you're looking at these distribution scenarios up here. A lot of people, again, get confused. Hey, but it's distributing up there. How comes you didn't expect it to go lower? Well, it's not about that. It's about managing your trade properly. Even if you're taking a sell position based on this distribution somewhere, then hopefully by the time the market reaches this zone of demand, you know that you should be breaking it even or closing partials, depending on your trade management style. But if you keep seeing that we are rejecting the same zone of demand and not breaking below it, then, that should give you more clarity for your initial trades. That's why sometimes we talk about hedging. But moving on, the next bit is pretty straightforward. We kept staying above not only a zone of demand, but that major structure point as well. The same thing. Pretty straightforward, low, high, higher, low, and higher, high. So now we have created a new high in the market. Again, all of this picture is coming from that initial 15-minute accumulation. But it's how you can continuously see the correct market behavior as it develops more and more. So we continue to stay on the bullish side of the market, continuously rejecting that zone of demand, and surprise, surprise, the last time we approached that zone of demand, we had yet another accumulation. Seller's climax, automatic rally, secondary test, sign of strength, again, quote unquote, sign of strength, because that's not normally on the schematics that a lot of people refer to. Secondary test in phase B, spring, break of structure to the upside, break of structure to the upside. You can go and mark this up for yourself. But now again, we've gone from that bigger picture, zooming in, seeing what's happening. Exactly the same thing we did here. Identified an accumulation and zoomed in. Over here, identified the bigger picture and zoomed in. Over here, same scenario. Looking at that bigger picture, seeing this again trend line with probably a lot of liquidity above it, and seeing the accumulation happen as we are approaching the trend line. Remember the scenarios we spoke about? This is where we can expect this to rally higher and take that liquidity. So again, these are multiple other trading opportunities for you to enter once we have broken that structure. As if that wasn't enough, this is where on the lower time frames, the market started to reaccumulate and even accumulate on a lower time frame for you to again have multiple other entry opportunities. The bigger accumulation, break of structure, move down, another accumulation. And if I'm not mistaken, I looked at this level on the 1 minute time frame, and this was another lower time frame accumulation. As I said, I'm not going to cover every single accumulation because I want to move on to a reaccumulation scenario right now and show you the second picture. This is November the 5th, 2020, so just over 2 weeks ago. And it's on the 1 minute time frame, GBPUSD, talking about this reaccumulation. We've done many videos on reaccumulation scenarios, so again, I encourage you to go and watch them to get a better understanding. But this is that general markup. Now, the markup that I have over here is a little bit more defined. I put every kind of major point, let's say, so you can even have this as a screenshot for yourself. How even at the beginning you can be mistaken with a potential distribution, but then you tend to continuously see manipulation of the lows, yet again, manipulation of the lows and breaks of structure to the upside. The reason why this reaccumulation is important, because it might feel very random in the middle of the range. The reason why this is very important is just to see it doesn't really matter what time frame I'm on. I'm not going to confuse myself with thinking I should always be on this time frame, or on this time frame it's better to identify this candle, or on that time frame it's better to identify this schematic. I want you to see that on any time frame you look at, you will be able to see some type of a schematic, some type of an institutional candle to go based on. So it's not about what time frame you're on. It's about having the correct directional bias from the beginning, sticking to it, and reading market behavior correctly. So that's why that reaccumulation is important, because it confirms many, many, many things. Not only it keeps confirming the original accumulation idea that we had, but we don't even need to speak about that first picture. That reaccumulation is confirming these two accumulations that we spoke about. Because as this is starting to have its rally, have its markup phase, it's reaccumulating again. It's continuing this cycle. So again, these could have been multiple entry opportunities once it broke above and once it broke structure. Let's go back to the hourly time frame, take it off replay mode to kind of see what happened after that. That was that reaccumulation picture we were talking about on the 1 minute time frame right there. And you can see, even if you missed that entire picture from the start, let's say on that day or within that week you weren't trading, so you didn't see this specific picture and you didn't manage to catch those original entries, you would have many more options to always get in the trade. There's always a trade around the corner. Even at these reaccumulations, you could have still capitalized off of all of that move to the upside. I don't want to spend too much time talking about what happened in this part of the market because I want to move on to the last two screenshots and the reason why I didn't post this on Wednesday. But I've highlighted a couple important areas on the, I believe this is 15-minute time frame. You can start to look at this range. And this is on 6th of November. So for your own backtesting, for your own study, you can start to mark this whole thing up as a reaccumulation, or look at the smaller scale distributions and accumulations that have taken place over here. Which direction have we manipulated and which direction have we broken structure, etc., etc. But let's move on to these final two pictures. So this was taken on 18th of November, 3 days ago. This is just a very recent documentation of everything we spoke about. So I don't think I need to go through it again. It should be pretty obvious by now. We have a trend line, first touch, second touch, even that third touch of the trend line potentially. So most likely we had a lot of people who were looking to buy this as it approached the trend line again. Another school of thought, for example, is people who would buy and sell it based on previous zones of support and resistance. That in itself is a zone of support, and that was a previous zone of resistance. So most likely there would have been a lot of orders at that level, not just the trend line, at the trend line, at this level with a lot of stop losses below. Other schools of thought, people who are trading this as a break and retest later on would have gotten trapped into this move to the upside. So left, right and center is just grabbing liquidity, it's just manipulating previous lows and trend lines. But the hope was to see some type of an accumulation as that's taking place. That's where, again, it's giving you more entry opportunities. This was on Wednesday. And this next picture was on Thursday, November the 19th, so 2 days ago. This is the updated picture. This is on the 10-minute time frame. This picture was on the hourly time frame, but it's the same thing. Exactly as expected, we reached below those previous zones of support. We reached below the trend line and started to accumulate. So let's open this up on the actual trading view and we'll go to the 10-minute time frame. So you can see after having a directional bias, all you got to do is have patience and see if it plays out. And if it plays out, trade accordingly. The same trend line, the same zone of support or the previous resistance that we spoke about, and that's that accumulation picture as it reached below the trend line. Now to finally mix again supply and demand with this whole thing, based on what we spoke about previous zones of demand, this is also a level that has reached below previous lows, and you can see a strong rally. You can see a major move away from that level to these highs, breaking above previous structure points. So there must have been some level of demand introduced at that level. So this can actually hold as a future zone of demand as well. So let's zoom into this accumulation a little bit so you can screenshot this for yourself. Again, have this as another potential case study for yourself. And again, since then, we have had a good move away from that level as well. We've had over 100 pip move away from that level. So it really doesn't matter whether you were looking at trades here, whether you were looking at it based on these hourly accumulations or based on the initial 15-minute accumulation, there's always a trade around the corner. So I'm going to recap very quickly. We initially looked at a 15-minute accumulation, 24th of September. Within the 15-minute accumulation, you could identify multiple lower time frame accumulations. And then we looked at trendline liquidity and an accumulation taking place alongside of a manipulation of that trend line. The move to the upside was the result. Then we looked at yet another trendline liquidity situation and accumulation taking place alongside of that trendline liquidity. This is 7th of October 2020, and how we kept above that zone multiple times, finding it very difficult to reach below that level of demand. And the final time we approached that level of demand, again, created trendline liquidity above, accumulated this time before approaching the trend line, broke structure, and again, resulting in this bigger move to the upside. In the process, we looked at multiple accumulations on the lower time frames after this accumulation that took place on 29th or 30th of October 2020, and a 1 minute reaccumulation, which took place on 5th of November 2020, all confirming and leading to this move to the upside. Then we looked at the pictures that were taken just about 2-3 days ago. which we were expecting the same scenarios for it to reach below the trend lines, manipulate the trend lines, whatever you want to call it, and accumulate as it's doing that. And it did exactly that. Then expecting obviously the market to move higher as we have marked up an accumulation and hopefully break structure points to the upside, and then resulting in this nice rally away from it. So I hope you agree with me when I say it was maybe worth waiting a few extra days for this to come out, just to see these final pictures, just to actually see it in action, see that you can actually apply these concepts to the charts. There's a major reason why I didn't want to go over a specific trading scenario in this video with actual entries and stops and take profits, because from what I see, a lot of people are way too invested in trying to always just take the trade, but they don't spend enough time understanding market behavior. But the truth is, if you understand market behavior, you're going to have access to as many trades as you want. That's when you will have true freedom in this industry. So don't look to all of a sudden grow to 6 and 7 figures if you can't consistently even read market behavior. Spend time practicing it. Believe me, it'll pay off. If you gained value from this video, don't forget to press the like button down below. Press the subscribe button if you're new. Again, welcome to our family and welcome to our community. And let me know in the comment section down below if this video did answer any of the questions that you had. Also, very quickly, for those of you who've been asking for courses and mentorships and wanted to know who I'm personally partnered up with, feel free to check out pipsofpersia.com. All information will be there. But with that being said, let's apply, let's practice, let's elevate, and let's catch some pips.